All right, well, welcome everybody to this presentation today. My name is Wade Hansen. I am one of the co-authors of Profiting with Forex and also one of the founders of the website by that same name. Welcome everybody who is joining us today. I'm excited about today's topic. One of the things we've been talking about a lot on our website and among other traders is the role that large institutional traders play in the forex market. And as you can see here, we're going to be talking about the commitment of traders, or the COT, as we like to refer to it. It seems like everything in this world is shortened to an acronym now. And the commitment of traders is something that is put out, it's a report that is put out by the CFTC, the Commodities and Futures Trading Commission. And it's a report that is put out every Friday, and it gives a tally of who is trading what in the futures market. For example, it will come out and it will say how many people have contracts, or actually how many contracts there are that are long the Euro US dollar, and how many contracts there are that are short the Euro US dollar. And so every week, the CFTC provides us with information that tells us if the majority of investors out there are either bullish on a certain currency pair or if they're bearish on a certain currency pair. Now, one thing in the Commitment of Traders report is it does split the numbers out into two groups. The first group are non-commercial traders and the second group are commercial traders. We look at the non-commercial traders as we analyze what is going on in the marketplace, what the sentiment is, because the commercial traders, the group that we don't analyze in our indicators, those are the people who are using the futures market to hedge any positions they may have. On the other hand, non-commercial traders are those who are looking to invest in the market itself, those that are speculators. And we want to know where they are going in their trades, because that is a good indication of where a currency pair is going to go. So if the non-commercial traders are bullish on the Euro US dollar, we've got a pretty good idea that the Euro US dollar is going to be increasing in value, because that is where people are putting their money. It's really a question of supply and demand, and as demand goes up for those contracts, it's going to push the price higher and higher and higher. So what we're going to do today is we're going to walk through the PFX Commitment of Traders Sentiment Indicator. We're going to see how it relates to the price action on currency pairs and how you can use it to give yourself a good foundation for all of your trading. The Commitment of Traders report, there is one inherent weakness in it. That is when the CFTC releases all of the data each Friday, the data is current as of the previous Tuesday. So what that means is we get the data 3 days after the fact. A lot of people have been petitioning the CFTC to get that information earlier and more regularly than once a week. The CFTC has not been inclined to do so, but we can keep our fingers crossed and hope that it will happen someday. But that is one weakness in the data. And knowing that, you want to use the data as a long-term sentiment indicator, giving you a nice direction of where to go. You don't necessarily want to use it as a timing indicator. You can do that in some instances, but really the information is most valuable in simply being able to tell, should I be bullish on a currency pair or should I be bearish on a currency pair? So I'm going to come back here. And I'm going to pull up the CPFX COT indicator for the dollar CAD. Now, looking at this, there are three lines that we want to pay attention to. The first is this black line, and you'll notice that it either is it's always going sideways, but it is either above this middle line or below this middle signal line. What that tells us is if institutional traders, the big guns that are out there moving all of the money in the market, are net long this currency pair, or if they are net short this currency pair. If it's above the signal line in the middle, they're net long. If it's below this signal line in the middle, they're net short. Now, why should we care where the big institutions are putting their money? It's because the big institutions are the ones who move the market. We, as individual retail investors, have no say whatsoever over where the market is going to go. We make up maybe 2% of the overall market. I know it's in the low single digits. And so we could all get together and say we want to place our trades so that we are bullish the Euro-US dollar. And even if we did that, it wouldn't matter, because there are so many other large institutional investors that they are the ones who drive the market. So the easiest thing for us to do is to jump on their coattails and ride along and say, okay, we know that you are going to be moving the market one direction or another, and we're just going to follow along. You go ahead and pave the way, and we'll watch where you're going and place our trades accordingly. So this tells us, as we look at this indicator, that for from last year in the beginning of October until this year at, you can see down here, the end of April, beginning of May, traders were net long the Euro-US dollar, those large institutional investors. Then at the beginning of May, they switched to being net short. So that's great information for us. We can see if overall the large institutional traders are bullish on a currency pair or if they're bearish on a currency pair. Now, having that information, that's great. That you can go out and read the Commitment of Traders report that the CFT puts out, and you can see that information right there, whether traders are net long or net short. What we've done is we have then crunched the data and mixed it around a little bit to create a sentiment indicator, because sure, traders can be net long or net short, but all that tells us is if they have bought more contracts than they've sold to be net long, or if they've sold more contracts than they bought. The question is, how many more? And are they starting to get out of that position, or are they looking at reversing the trades that they've been in? So this orange sentiment line gives us a good indication that you can see right here on the dollar CAD that even though for this 6-month period, or almost 7-month period, institutional investors were net long the dollar CAD, you can see that their sentiment or their feelings toward that position were waning. They were weakening. People saw that the Canadian dollar was getting stronger, and so big institutions had to start unwinding their positions. That's another part about being a big institution. You have to slowly unwind your positions, sometimes over a period of months, because of how many positions you have. If you tried to exit all of your positions at once, like we do as small retail investors, then you would move the market and completely destroy any profits that you had made. If you had bought a bunch of dollar Canadian contracts and all of a sudden you wanted to get rid of all of them and you shoved them all out into the market, if you shove them all out at one time, the price of each one of those contracts is going to fall dramatically. And you don't want that as an investor. And so large institutions have to slowly unwind their position. They sell, if they've got 1 million contracts, they'll sell a couple thousand each day, and maybe 50,000 on one day when they get a big spurt, but then they'll pare it back down and they'll sell 20,000 contracts the next day, and they'll slowly start unloading that position so they can can maintain the profits that they have in those contracts without completely upsetting the market. So that's what this orange sentiment line tells us, is that though in the case here of the dollar Canadian, the institutional traders were net long, they were slowly starting to unwind that position. And then you get down here to the beginning of May, and boom, finally, institutional traders have more short contracts than they have long contracts. But we saw that happening before as this sentiment line started coming down. Now this sentiment line has started going back up, but it is coming back down again, so it will be interesting to watch in the future and see if traders on the dollar CAD end up going net long again, or if the sentiment is going to resume its bearish sentiment and they'll remain net short. Now there are a few things we want to look at on this orange sentiment line. First is the trend of the orange sentiment line. Just like you would on a stock chart, you can look for higher highs and higher lows, or in this case, lower highs and lower lows. So as we watch the trend and we see it falling, that gives us a good indication that yes, these large institutional investors are net long their positions. However, they seem to be losing interest in that, or a belief that they should be, and they're starting to unwind their positions. So that tells us that it may be a good time for us to look at going short. Now, the second indicator that we can look for is when this orange line crosses down below the signal line. So on this date right here, you can see that says February 2nd, 2007. The sentiment line crossed below the signal line. And so that could have been a signal to us saying, okay, it is really time to go short the dollar Canadian pair. Now I'm going to toggle back and forth here between a few of my charts to illustrate how this works. So I'm going to write down a few key dates here. We have February 2nd, when it crossed down below. We have March 16th, when it crossed back up above, but then immediately the next week, on March 23rd, it crossed down below. Now, as I scan across this indicator, I have to go for a few months until here on August 3rd, it finally crossed back up again. Now, in the meantime, we knew we were in a downtrend on the sentiment here, and we switched to an uptrend on the sentiment here. We formed a higher high here on June 8th, and we switched into an uptrend. And it was here, back here on December 8th, that we switched into a downtrend. So let's go take a look at some of these key dates for us. I'm going to pull up my Metastock charts here, and you can see that I have a chart up here, a daily chart of the dollar Canadian. Now, let's go find those dates that we were looking for. First, let's identify the date. Actually, I'm going to draw some lines on here. When our uptrend began, and that was 12/8. So right there, where I've drawn that blue line, that's where the downtrend on the Commitment of Traders report began. Now you can see that it took a while for this currency pair to slow down. That's why I say the Commitment of Traders report isn't always the best thing to use as a timing indicator. Now, this is the trend that I'm looking at and that I've illustrated here. I'm going to now point out the dates when the sentiment line on the Commitment of Traders indicator crossed down below that signal line and when it crossed back up above. So the first date was 2/6, or February, sorry, it was actually February 2nd, right here. So that is the date when the Commitment of Traders report first, or the indicator first crossed down below that signal line, indicating that it may be time for a bearish trade. Now, this almost picked the top right there. It won't always happen that way, but it is usually fairly close. Now, on March 16th, find over here, the indicator crossed back up above. So if we look at when we would have gotten in on a bearish trade, and actually draw a line here, would have gotten in on a bearish trade, and we would have gotten out on that bearish trade, we would have made the difference right here. Actually, get rid of that. So we would have made about 75 pips. Now, we would have ridden it down for a while, ridden it back up, and finally gotten out with about a 75 pip profit. Now, as we looked at the indicator, remember it was only a week later, on the 23rd, that it crossed back down below. And so here, if we would have gone long here and gotten out here, we would have had a loss of about 150 pips. So the first time we would have made about 75 pips. Second time we would have lost about 150 pips. So we're down about 75 pips. However, this gave us a great indication as to when a new long-term trend was going to start. And it continued on all the way until August 3rd. That was the date when we identified right over here that we would have gotten out. So if you look at this nice section of the chart right here, I'm drawing the circle around, we would have known, based on that Commitment of Traders sentiment indicator, that the institutional traders, those traders who are moving the market, who have got the billions of dollars out there flowing back and forth between currencies, they're the ones that are moving the market. They were bearish on the dollar Canadian. And sure enough, it kept going down and 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 down. And so we would have gotten in somewhere around 116 and gotten out somewhere around 106 maybe. And so that would have made us 1,000 pips. So again, the first trade we had would have made us about 75 pips. Nice trade. Second trade we would have lost us about 150 pips. Not so nice. But because we had a positive one before, we're only down 75 pips. But then we would have had this tremendous trade through the months of April, May, June, and July. That would have netted us 1,000 pips. So we would have come out ahead about 925 pips after these three trades. And so in this case, the sentiment line crossing back and forth across the signal line, just like you might see a MACD cross back and forth across its signal line, would have helped us identify where the big institutional investors are going and how we could then follow along and ride their coattails or jump on the institutional investor bandwagon and make profits as they start moving the market. Because it's not us who's moving the market, we're just trying to take advantage of those moves. It's the institutional investors who are moving the market. So in this case, it would have worked. Now, like any oscillator out there, if you try and use it as a technical indicator to get you in and out at specific times, it is always going to outperform during long trends, and it's always going to probably underperform during sideways, up and down, choppy trends. Like we saw here at the beginning of 2007, this sideways choppiness, we made money on one of our trades, but we lost money on another one of our trades. So anytime the market's going to be choppy like that, it's probably going to underperform. However, it's going to get us into these long-term trends that are going to help us take advantage of those. And it's always the trends where you make your money. It's really hard to make money for instance, in this last month and a half, it's been tough to make money on the dollar Canadian if you are trading on the daily charts, because it's just been sideways. And so, again, just like any oscillator out there that you're using, like the MACD, like the CCI, any of those indicators, it's going to outperform during trending markets and probably underperform during choppy markets. So again, there are two ways that you can look at this. You can look at it as, yes, I am going to use this as a timing indicator and try and take advantage of precisely those days when it tells me to get in and out. Or you can look at it as laying your foundation for how you are going to establish your outlook on any one currency, if overall you are bullish on that currency pair or if you're bearish on that currency pair. So I want to come back and I'm going to close that out, and I want to see if there are any questions that you have. There's one question here. By one estimate, 70% of market participants in FX hold positions for less than 3 days. So does that not make COT data unreliant? I have never seen that data. I would love to take a look at that. I'm sure that would have an effect on it. I am wondering if, the larger institutions, I don't think that they can jump in and jump out of their trades quite that quickly. Larger banks, some hedge funds maybe, but I'd be interested to see that report where you had heard that. I've never heard that before. So the next question was, do we short if the sentiment is short? Again, you can use it as a timing indicator, or you can look at that as getting your broad direction, saying, okay, I'm going to move in this bullish direction, or I'm going to move in this bearish direction, not necessarily the timing on this. Boyke just jumped in and said that is for us, the retail investor, that we hold trades for 3 days or less. Let's see, what about August 8th? Short or long? Let me go back and let's check that out. August 8th. Okay, so we had seen this jump up here on August 3rd, now here where it went long. And so let's go ahead and take a look at the chart for that. Come back here to the chart, and okay, so we've already got August 3rd drawn on there, and it's said to go long at this point if you were using that sentiment line as an entry and exit indicator like we were illustrating here. So if you had gone long there, currently you would be down about 200 pips. So now Murphy's Law says that anytime you're going to try a new indicator and try trading off of it like this, the first trade that you make is always going to be a losing trade. I don't know if any of you have found different out there, but for me, whenever I study a system, backtest a system, use any type of an indicator, and it looks really good, the first trade I place on it is always a loser. I don't know how it works out for me that way, but that's how it always happens. So that'll probably happen for everybody out there if you do try and use this the first time. But the winners do come, like you can see here on the dollar Canadian. Here I would anticipate that tomorrow, which is Friday, when the Commitment of Traders report comes out again, that we might get, pull this up here, that we might get this sentiment line dropping back down below the signal line, which would tell us that, okay, we went long on August 3rd. Probably wasn't the best idea because the currency pair seems to be resuming its downtrend, and it may be time to jump back on the bearish bandwagon, especially if the dollar CAD, sorry to keep flipping back and forth here, if the dollar CAD does break through this support level that we're seeing right here. If the dollar CAD can break through this level, we could very well have another movement to the downside of at least 500 pips. Now I say 500 pips because I'm looking at this channel right here that formed, that was from, somewhere, it reached up as high as 108 and has gone down as low as 103. So the width of that channel gives us a good indication of if we were in a downtrend here, then we consolidated for a little bit and the channel had a width of about 500 pips. If we do resume that downtrend, the initial price target I would set is 500 pips below there because that was the width of the consolidation. For some reason, that seems to work out that as you look at any sort of a continuation pattern, whether you're looking at a pennant or some flag patterns or whatever you're looking at, the width of the pattern seems to play out in once the trend has resumed. So that's something I'm looking at there. And if that happens, so tomorrow, let's say we get a sell signal on that Commitment of Traders report. Yes, we did just lose 200 pips on this trade that we would have taken during the consolidation period. But if the trend resumes, we could make another 500 pips. More than making up for the 200 pips we lost and adding to the pips we would have gained in the first part of the year. So, again, you have to look at yourself and say, what type of a trader am I? Do I like to take technical trades based specifically on entry and exit signals that I get from an indicator? Or am I looking to understand where the sentiment in the market lies, whether it's bullish or bearish, and then start placing trades accordingly based on different support and resistance levels that I see, Fibonacci retracement levels. Each of us is different, and we can use the information from the Commitment of Traders differently, and depending on what's going to work for us in what we like to do as a trader. So I'm going to come back here and answer a few more questions. Let's see. Question one is, where can I get that spreadsheet? We don't have the spreadsheet available. One thing we do have is on our website at profitingwithforex.com or pfxglobal.com. You can come here and on our analysis page, you can click there and click through to fundamental analysis. And as you scroll down the page just a little bit, as soon as this loads for me, got a few things running on my computer, so you'll see right here in the middle are COT sentiment charts, and we have them available for all of the major currency pairs. So the dollar Canadian, you've seen here, if you trade the Euro US dollar, more you can come in and get that for the Euro US dollar. And we update these every Friday when the commitment of traders information comes out from the CFTC. So, got a question. Can we look at the pound yen? Don't currently have that information for the pound yen because the CFTC does not release it. They only release the information for each major currency. And so looking at this, one thing you could do is, I'm going to go to my charts here, and looking at, scroll up here, so the pound, you could look at it synthetically and say, okay, right now traders are net long the pound, and the sentiment line had crossed down below, but it has turned around and is starting to move back up. So what that tells me is traders are net long. They were unwinding some of their positions, but now they're starting to accumulate more bullish trades on the pound. So that tells me that traders are turning bullish on the pound. Let's take a look and see what they're doing on the yen. This chart is actually quite interesting to me. For the longest time, traders have been net long the dollar yen. That means nobody had any confidence in the Japanese yen. And if you've been watching the markets for the past 5 years, nobody's had confidence in the yen at all, because it's been the source of the carry trade. The Japanese economy has been fighting deflation. The Bank of Japan has lowered interest rates to almost zero. They're at 0.5% right now. So nobody had any confidence in the yen. Everyone was trading against it. And so naturally you would see that traders would be net long the dollar yen. However, for 2 weeks, right here in August, traders finally became net short on the dollar yen. But for 2 weeks. And as you've been watching what's been happening out there in the markets, you've seen that with the liquidity crunch, the subprime meltdown, everybody has been looking for safety. And they've seen that one of the ways to reduce risk has been to unwind the carry trade. And if you've been watching the value of the yen lately, it's just been this cataclysmic drop off of the edge of a cliff, and the dollar yen has sunk. So for 2 weeks, these large institutional investors were net short on the dollar yen contracts because everyone was unwinding the carry trade. However, last week, if you look at this data, boom, suddenly institutional investors are net long again, which tells us that maybe the panic and the unwinding of the carry trade is over. Now, whether people start accumulating carry trades again is yet to be seen, but it looks like the mass sell-off, at least, the tide has been stemmed on that. So looking at these two charts, I see that institutional investors are bearish toward the yen, and they are net long and turning more bullish toward the pound. I would then say my fundamental outlook, based on the Commitment of Traders report, what the large institutional investors are doing, is that I would be bullish the pound yen, because institutional investors seem to be more bullish toward the pound and more bearish toward the yen. And so as I look out into the future, come back here and I'll pull up a chart of pound yen here. So I look at this, I can do all of my technical analysis on this pair. You know, I can draw support and resistance lines from all over the place. I see nice upward trending support level here. We do have a few levels that we're going to have to break through, and it looks like we're right about there right now on this horizontal line. And as I'm looking at this, I say, okay, looking at my support and resistance lines, in the short term here, I'm seeing a nice upward trending support level, and I know that on my commitment of traders reports, I have a bullish inclination from there as well, which may lead me to say, if I can break out of where we currently are right here, I would take that trade and look at the next level of resistance, potentially at about 238. I could make a couple hundred pips as we refill the gap that we got as the currency pair fell in August. So it's one more piece of evidence in the case that I'm trying to build for taking a trade that will help give me the confidence and conviction I need to say, okay, this currency pair really does have what it takes to move, because the large institutional investors who move the market believe the same thing. They believe that the pound is getting a little stronger and the yen is getting a little weaker. For me, I was actually chatting back and forth with another investor earlier this week about the validity of fundamental analysis versus technical analysis. And for me, I look at it and I say, boy, I'd like to use both. I consider the Commitment of Traders report fundamental analysis, definitely, because it's not on my chart. It's fundamental analysis that I look at and say, okay, this gives me a good direction, and then I can use my technical analysis skills on top of that to more accurately time my trade and set my profit targets, my stop loss levels, all of those things. But I look at it and I say, let's use the fundamental data that we have. It's there. It can help us, and it gives us a good indication of what's happening. And really, investors out there vote with their wallets. I can sit down and talk to somebody about where they think a certain currency pair is going to go, and they can tell me all of the nice things that they want to about what they believe the strength or weakness of that currency pair is, and all that's great, but in the end, I want to see where they place their trade, where their conviction is. And so I want to see the same thing from large institutional investors as well. What is their conviction? Where do they see things going, and how are they voting with their wallets? And that's exactly what the Commitment of Traders report tells us is, okay, these large institutional investors, these banks, these hedge funds, they put out different reports, they say different things about how they view the strength of the US economy and the European economy and what's happening with the carry trade and all these different things, but in the end, they have to put their money where their mouth is. And the Commitment of Traders report tells us exactly where they're putting their money, and we can then take that data and use it as, again, one more piece of evidence in the trade that, in the case that we are building for taking or not taking a particular trade. All right. Let's see. got a few questions here that we're looking at. Could you let's see. Can we look at the Aussie USD and the Euro USD? Yep, Mabel, let's see if we've got enough time for that. And also want to look at some of these other questions. What were the websites you mentioned where the COT graphs are available? I'll type that in here for you. It's profitingwithforex.com, or this will take you to the same place, pfxglobal.com. That's the website that we run. So looking at the Aussie dollar and the Euro dollar, and then there was a question up here of, could you explain your seesaws for the news? What do they mean, and what time of day do we publish them for the news? I am going to defer that to my next question. Well, till my next presentation, just so we can stay on topic here. But Swana, if you do want to get in touch with me and we can talk a little more, you can send me an email at wade@pfxglobal. So, and then Diane has a question: is the basis for the indicator the calculation long short for non-commercials? If so, the result was more short for weeks from January 3rd forward to April 17th. So how was it the indicator didn't cross over until 2-2? Yeah, we do look at the non-commercials. We've taken the commercials out of the equation simply because they are using futures contracts as hedges, not necessarily not speculating on where they believe the market is going to be going. Then with the indicators, as you look at, if any of you are familiar with the COT report that the CFTC does put out, they are quoted in the terms that the futures contracts are quoted, and all futures contracts are quoted in dollar terms. And so if you're looking at the dollar Canadian, the dollar yen, and the dollar franc, you actually have to invert the information that you see on the COT report for it to match what you're looking at in the spot market. But long minus shorts was negative all those weeks. Okay, yep. So it's just that flip. So excellent, very good question, Diane. So if any of you are interested in going out and looking at the Commitment of Traders report, I believe the website that it's found on is www.cftc.gov. It's a massive report that talks about everything from currency futures to precious metals to grains to orange juice. It's got everything in it, so you can go check that out. But hopefully what we've done on our website and with this indicator is distilled the information down for you so that you don't have to plow through the spreadsheets. I had two questions. Do we offer a paid service? And and then Diane says that you can sign up to get the updates from the COT report each week. We do not offer a paid service. It's all there for free on our website. So we've got a few more minutes and had a request to take a look at the Aussie dollar and the Euro dollar. So let's go take a look at the Aussie dollar first. See what we've got time for here. Scrolling down here. Okay. The Aussie dollar, currently investors are still net long, and as we go to look at the chart of the Aussie dollar in just a moment, you'll see why they're still net long. The Australian dollar US dollar pair has been in an uptrend for quite some time. That all changed, of course, in late July when the liquidity crunch and subprime mess erupted, and the dollar started strengthening against the Australian dollar. A bunch of things moved, but so the institutional traders have not been able to unwind all of their trades yet. However, as we look in recent weeks through August, we see a large fall at the end of July, then some consolidation and a move higher. So as of last week, the institutional investors, their sentiment was increasingly bullish. Now, I can guarantee that tomorrow when the numbers come out, this line will be up even higher. And let's take a look at that on the charts and see why. So going back over to my charts, I'll open up one here for the Aussie dollar. And you'll see that we have been in this huge extended uptrend on the Australian dollar here. And again, end of July came, credit worries abounded in the markets, and we had a large retracement into the middle of August, and at about that same time on that COT indicator, we saw that things were starting to turn around. The sentiment was consolidating and starting to turn bullish, and sure enough, when we saw that happen, again last week was 9.7. Right there. We saw the turnaround on that sentiment line. 2 days later, we have a nice pop-up here. And with that pop-up, I can tell you that we are probably going to see that sentiment line get higher as this is higher. And as I look at this, we're right at a critical resistance level that if we can pop up above that level, we're going to be sitting pretty on this Australian dollar pair for an opportunity to move much higher. So that was the Australian dollar. I'm actually going to not go in and do the euro dollar just because of the time constraints we have. I'm to the end of my time, actually a little bit over, but I would encourage you to go check out those charts. The question here from Albert is, where on the website are those charts? If you again go in and on the top menu bar here, if I go back to our home page, you'll see analysis. You can click there, and then you can choose between fundamental analysis and technical analysis. On our fundamental analysis page, we've got quite a bit of analysis, but right here, just a little bit down on that page, is where you'll find all the COT charts. And we've got them again for each of the major currency pairs. And over here we explain how you can use them, when you would use various entry and exit points, and why you should consider using them. So Mabel did have a question of where and when would your buy entry be? Using the COT charts, you can use the buy entry at one of two places. You can look at the times when that orange sentiment line crosses the middle indicator, the signal line, or you can look for times when that orange sentiment line changes direction. and changes trend. If you are going to use it as an indicator where you buy and sell on specific times, I would look for it to cross that middle signal line. If you are going to use it in your analysis as simply giving you an idea of whether you should be bullish or bearish, look at the trend of that sentiment line and then wait for it to come in and actually see when it crosses over. So I appreciate the time that all of you have so generously given me this morning. I recognize that everybody's every hour is very, very valuable to each person, and I hope that this has been helpful. For me as an investor, I like to look at longer term trends. I like to look at the fundamental picture that is being painted for me before I then jump in and start using my technical analysis skills to more accurately time my entries and exits. So I hope that you can use some of this information in your own trading, that you can incorporate it whether you are a shorter term day trader, knowing that institutional investors are bullish on the Australian dollar US dollar pair may influence you to only take bullish short-term trades. If you're a longer-term trader, it will probably influence you to only take bullish long-term trades. So again, any questions you have for me, please send me an email. I'd be more than happy to respond and chat. Again, we've got a lot of information that covers the various fundamental information that we use on our website. We'll also be posting a video of this presentation on FX Street, where they have got tremendous information for you. So I will be back later this month for those of you who are premium members out there, and then maybe sometime in October we can all sit down and go over another session for one of our open days. So again, thank you very much. Have a great day and best of luck in your investing.